which is the Federal Reserve's preferred inflation measure. Central banks, including the Fed, the Bank of Japan, and the Bank of England, warn about the economic impact of tariffs. Additionally, while a short-term bearish move in the S&P 500 is possible, it seems unlikely given the current economic landscape and the liquidity influx in the US economy that I just mentioned. Welcome to today's market analysis. I'm Isaac Martinez, a trader and analyst at xChief, and in this video we'll break down the latest movements in the financial markets. We will analyze key fundamentals impacting the markets and dive into technical analysis for the US dollar index, the S&P 500, the Euro USD, and Bitcoin. With volatility at its peak and major economic events shaping the trends, let's explore the opportunities that lie ahead. Stay tuned as we uncover key insights and help you navigate the markets effectively. As always, we will start with the economic calendar, and don't forget the hours you are going to see are based on GMT-5, the New York trading session. This week, we have several key economic events that could impact the markets. Started with the French flash manufacturing PMI and French flash services PMI. We also have some reports like the German flash manufacturing PMI and German flash services. These reports measure the activity levels in the manufacturing and services sectors. A number above 50 indicates expansion, while below 50 suggests contraction. Traders will be watching these numbers closely to assess the economic health of the Eurozone, particularly as concerns about growth remain high. We now can see that the reports are positive for the French flash manufacturing PMI and also for the German flash manufacturing PMI. But we have a worse than expected report from the German flash services PMI. Later at 2:45 p.m., we had the US flash manufacturing PMI and flash services PMI. These reports provide insights into the strength of the US economy. Strong numbers could boost the dollar, while weaker data might increase speculation about Federal Reserve rate cuts. As you can see, we had weaker data related to the flash manufacturing PMI, but with the flash services PMI, we had better than expected data, so it reaches a balance. Moving to Thursday at 1:30 p.m., we have the final GDP for the US. This report measures the total economic output and is a crucial indicator of economic health. A strong reading can support the stock market and the dollar, while a weaker result may raise concerns about a slowdown. At the same time, we get the unemployment claims report, which tracks the number of people filing for jobless benefits. A higher than expected number signals potential weakness in the job market, while a lower number suggests strength. Finally, on Friday at 1:30 p.m., we have the core PCE price index, which is the Federal Reserve's preferred inflation measure. If inflation remains high, it could delay rate cuts, while lower inflation could increase expectations of monetary easing. These key events will play a critical role in shaping market sentiment and influencing trading decisions. Keep an eye on how these reports unfold, as they could drive volatility across major currency pairs, indices, and commodities. And now we will continue with the most important fundamentals of the week, and we will start with the Asian markets because they face turbulence amid global uncertainty. Hong Kong tech stocks dropped 3% after a recent rally, while Chinese markets suffered their biggest two-day decline since November. Stocks in Indonesia and Taiwan also fell, while Japan saw a slight uptick and US futures remain stable. Markets are bracing for Trump's tariffs set to take effect on April 2nd, imposing reciprocal duties and sector-specific measures, increasing uncertainty. Companies like FedEx, Nine, and PDD Holdings reflect the impact of these tariffs and economic slowdown in their earning reports. Central banks, including the Fed, the Bank of Japan, and the Bank of England, warn about the economic impact of tariffs. Meanwhile, Trump continues to pressure the Fed for rate cuts, while Jerome Powell maintains a cautious approach, signaling no rush to lower rates. In Europe, the European Union has delayed imposing tariffs on US whiskey and seeks dialogue with Trump before retaliating. Germany is set to vote on a growth package, including a 500 billion euros fund for infrastructure and defense. In currencies and commodities, the US dollar strengthens, pushing the euro and yen lower. Gold declines 0.5% but remains above $3,000 per ounce due to its safe haven demand. Oil prices rise on supply concerns, with OPEC Plus announcing new production cuts through 2026. In the crypto market, Bitcoin falls 1.7% to $84,424 amid economic uncertainty. However, XRP shows resilience after the SEC dropped its case against Ripple. Regarding the US dollar, we've been seeing a recovery and the formation of a potential bullish structure. After establishing a bottom around 103.199, the dollar has started to show strength, building an upward structure. Given this, it is highly likely that we will continue this bullish movement, potentially reaching some fair value gaps as we can see here or here within the broader downtrend we previously experienced. What I would keep in mind for the upcoming sessions, especially considering that today is Monday, March 24th, is that the dollar may still maintain its upward momentum as we are seeing right now. This means we could see further bullish movements in the coming hours and sessions. As for potential targets, I would set the first one around 104.704, which is the 50% of this fair value gap. And assuming the recovery continues, the next target would be 105.432. Personally, I don't expect the dollar to decline further, so keep this in mind if you are also trading other assets. With the SP 500, we have a similar story. We have seen the establishment of a bottom around the $5,500 level, and from here we could witness a strong bullish move. This is partly due to recent reports from economists confirming an inflow of liquidity into the American economy in the past few days, which tends to translate into upward movement in major indices like the SP 500. For this week, my target levels are as follows. The first one is located here at $5,865. Second target is at $5,986. The third one, $6,069. And the fourth target, $6,147, although I find it highly unlikely that the price will reach this level to test the all-time high. Personally, I believe it will be difficult to surpass the second target, but it's important to outline these levels for consideration. Additionally, while a short-term bearish move in the SP 500 is possible, it seems unlikely given the current economic landscape and the liquidity influx in the US economy that I just mentioned. With the Euro USD, we have a completely different story, since it has an inverse correlation with the US dollar strength, that is the dollar index, which we analyzed earlier today. We could see a significant bearish move in the Euro USD. This means a potential decline in the pair. I personally have the following downside targets. The first one is 1.074, second one 1.065, third one 1.057, and the last one 1.04489. While there is a possibility of reaching any of these levels, keep in mind that the deeper Euro USD falls, the stronger the fundamental support in the US dollar would have to be. This could be challenging given the current geopolitical tensions and the lack of resolution on ongoing global issues. Additionally, don't forget that Donald Trump's tariffs are set to take effect on April 2nd, which could also impact the market. Finally, we have Bitcoin, which after establishing a bottom at $76,555 has been consistently attempting to form a bullish structure, creating higher highs and higher lows. This suggests that the price is trying to establish an upward trend. By the way, these are the higher lows that we are seeing right now, all of these, and the higher highs, we can see them here. Clear examples of this simple theory. However, as we approach the end of the New York session and the start of the Asian session on this Monday, we could see a slight correction. This correction would likely aim for the 50% retracement of the last range, which is approximately at $86,232. Following this corrective move, a recovery is highly possible, with the price potentially attempting to break above the most recent high, $88,800, which is this point of the price. So we can see a movement like this. However, before this move occurs, Bitcoin needs sufficient liquidity. Keep in mind that for this downward phase and the overall market fear to be considered over, Bitcoin must break above $95,128. This is the last major high that led to the recent lower low located here at $76,555. Only a strong breakout above this level, meaning a solid bodied candle, would confirm a bullish outlook that could push Bitcoin back toward all-time highs. For this week, my key targets are $91,116, the first one, the second one $92,817, and the last one $95,128. And obviously, these last two targets are only possible if the bullish momentum continues. That wraps up today's analysis. If you found this content valuable, make sure to like this video and subscribe to the channel for more in-depth market breakdowns. Also, don't forget to register at xChief to access cutting-edge trading tools and stay ahead of the markets. The link is in the description. See you in the next video.